as the receipt of or as a substitute for personalized investment advice from the advisor. Different types of investments involve varying degrees of risk, and there can be no assurance that the future performance of any specific investment, investment strategy, or product, or any non-investment related content made reference to directly or indirectly in this broadcast will be profitable, equal any corresponding indicated historical performance level or levels, be suitable for your portfolio or individual situation, or prove successful. Past performance is not indicative of future results. Investment advisory services offered through Wealth Quarterback LLC. Tired of losing money in the stock market roller coaster? Frustrated with the government taxing you into oblivion? Worried about inflation? How do you prepare for so many financial uncertainties? Welcome to the show that will help you develop your game plan. The Financial Quarterback with Josh Jalinski. Josh is a noted financial advisor and president of the Jalinski Advisory Group, and he's here to answer your questions. Call into the show at 800-321-0710. 800-321-0710. Now, let's kick off your financial future. Here's Josh Jalinski.
Hey everybody, we're live on YouTube taking your calls on all matters financial. If you have questions on stocks, bonds, annuities, mutual funds, whatever question you have, Bitcoin, it could be the craziness of the Iran conflict. Give us a call, 800-321-0710. We are live, taking any and every question you might have on this beautiful day. 800-321-0710. If you have questions on stocks, bonds, annuities, mutual funds, we are here. 800-321-0710. So we've gotten a lot of questions that says, hey, Josh, we want to hear from you. We want to do a live call-in show again. So this is your call-in show. So call me now, 800-321-0710. Got a lot going on in the world of finances. SpaceX. A lot of people know, how do you get in SpaceX? Getting in ahead of the IPO is possible, but there are some caveats. It is possible to get into SpaceX before its initial public offering, but there are risks, trade-offs, and fees. The upcoming SpaceX IPO could happen as early as June, with a potentially massive 30% allocation to retail, with underwriters of major trading platforms providing retail investors with allocations post-IPO. But for those who wanted a little sooner, it's complicated. And you could call us at 888-988-JOSH if you want to get in. There are risks, so we'll talk about that. The most direct route is through the primary private secondary market. These are transactions in which existing shareholders, employees, early investors, or former contractors sell their vested stock to new buyers, usually at a nice profit. SpaceX does not issue new shares. Investors are buying from existing shareholders. Now, according to Yahoo Finance, as of yesterday's close, the allocation of SpaceX was $603 a share. That's more than Tesla is trading at. SpaceX is consistently one of the most actively traded names on our platform because there's nothing else like it in the private markets. You got a highly defensible, massive operating scale business, a multitude of major TAM, total addressable market expansion opportunities, with a continuous evolving story. That from Greg Martin of Rainmaker. Demand has also almost always outpaced supply. Now, here's the thing that I'm worried about with SpaceX as a human. This is from Pras Subramanian. He's the source for this segment from yahoofinance.com. Here's what I'm worried about, Jim. And today, on today's edition of the Financial Quarterback, we're joined by Jim.
Welcome back.
Jim, hopefully you don't sound like a hostage.
No.
You have a. There was a listener who said you sounded like you were on a hostage video one time. So, what I'm worried about, and what I want our government and HHS secretary to investigate, is what are all these satellites doing to our brains? They talk about how cell phones will be the new cigarettes. You know how like your grandmother and grandfather smoked cigarettes and they didn't know it was bad for them, right?
Oh, yeah.
How many, you always talk about that, Jim, right?
Oh, yeah.
They smoked cigarettes and they had
In the
that gum.
house, in the car.
Ew. It's amazing you're even alive.
Yep.
And then, didn't they chew that gum that I like? The C. Howard's purple lavender gum.
Yes. Yes.
The scent of nicotine and lavender
You're
filled
right.
the room.
My father's favorite gum.
I love that gum. So, although I've never smoked a cigarette a day in my life. However, I think SpaceX, before everybody gets crazy about it, what is the risk of having space debris? What is the risk of having us zapped? I like FiOS where the internet cables are underground, but imagine everybody has SpaceX, what's that thing called? Starlink? I don't even know if Starlink's technically in on the SpaceX stock. But Starlink has all these satellites zapping our brains out. Have we done any investigations of that?
No.
Of how many new cancer risks there will be? So I think Elon, he's going to be the first trillionaire with this stock. He should be on the hook for investigating the risks to humanity. He's all worried about humanity going to Mars. I'm more like nobody can live in Mars. I don't want to go live in Mars in a spacesuit and have all the issues of space. But we live on Earth. And a lot of people are getting cancer now. And I think some of it might be all these EMFs floating around. Would you like that study done, Jim?
Yeah.
So SpaceX, if you want in on it, there's a lot of ways you can get in. You can get in on the secondary market. There are certain exchange-traded funds right now or mutual funds that can get you an access, but some of them only have like 1%, and some of them have 44%. So if you want in on SpaceX before the pop, now realize the risk is those generally have higher expense ratios, number one. Number two, higher fees. Number two, you are risking that it could pop and then drop. It could pop and then drop. So, meaning drop in share price. So this $603 share price is what Yahoo is saying it might be evaluated at if it was traded publicly today. Might go as high as 1,000, when the IPO hits, but could be cut in half. So we're going to the phone lines, 800-321-0710. Go ahead, James. Talking about our favorite subject. Go ahead. James.
Hey, Josh. Thanks for taking the call. I seem to get a lot of conflicting information about eligibility for a Roth IRA in regards to the income limit. I believe the income limit is $150,000, and if you make over that, you can do a backdoor contribution. But I've been told if you have a rollover IRA, you cannot do backdoor contributions. Can you provide any clarity around eligibility and if I am eligible to do backdoor? I do have a rollover IRA. Am I eligible to do backdoor Roth contributions?
You are eligible. You just have to follow what's called the pro rata rule. So what James is talking about, and probably the hottest subject on the show right now, is Roths. backdoor Roths, Roth conversions, income filling. It's one of our 6 game-changing playbooks where we cover tax planning. One of the things that everybody wants to know about is, should I do a backdoor Roth? Should I do a... Now, backdoor Roth is illegal. It allows high-income earners to bypass income restrictions and contribute to a Roth. It involves making a non-deductible contribution to a traditional IRA. This is if you're over the income limits, and then immediately converting to Roth. And it's huge. This avoids limits on conversions and providing tax-free growth. But if you hold other pre-tax IRAs, for example, a SEP IRA, a simple IRA, or a rollover IRA, the IRS calculates taxes based on the ratio of all of your pre-tax and after-tax IRA funds. A large pre-tax balance can make the conversion taxable. So one of the ways around this is you do an IRA to 401k rollover and then do the backdoor. Then you don't have to follow the pro rata rule. The other way is to just follow the pro rata rule. Now, I'm not a CPA, not giving tax advice, but I don't know how they even audit this. It's very confusing. Now, you're supposed to file Form 8606. Now, converted funds must generally stay in the Roth 5 years to avoid potential penalties and early withdrawals. So I hope that helps you. But there's a lot to a backdoor Roth. Call us for our game-changing playbook on tax planning. And we have a program where you can actually see if the Roth is right for you or the backdoor Roth. So what you do is you put in $7,000, $8,000 using personal funds. There's also something called the mega backdoor Roth where you could potentially do up to $72,000. That's another huge concept. And there's the solo Roth 401k that is non-income related as well. If none of these things work for you, you could also do life insurance, which grows tax deferred, and you can pull it out tax-free like a Roth, subject to IRC code 7702 and 101A. So any follow-up questions on that, James?
I really appreciate the information, because I've gotten a lot of conflicting information from different people, including my accountant.
Because they don't know what they're talking about.
And yeah,
it's pretty simple.
So thank you very much. That's very helpful.
Yeah, it's pretty cut and dry. If you have all your money in a 401k, you can do the backdoor Roth with no pro rata rule. If you have other rollover IRAs, you have to follow the pro rata rule. Now, I've never had anybody personally being audited for the pro rata rule. That doesn't mean you aren't going to be the first, but I would follow it. A lot of people don't follow it. Maybe that's what your accountant's saying. But hey, that's why many people are calling us for our 6 game-changing playbooks at 888-988-JOSH. If you schedule and keep your no obligation Roth review at 888-988-JOSH, we'll show you this and more. But by the way, joint filers now, 236,000 is the limit. So more people can qualify for a traditional contributory Roth than ever. I'm also going to break down the whole Roth rules when we return. This is Josh Jalinski, the financial quarterback. Don't touch that dial.
Josh and his team at the Jalinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the Financial Quarterback and count on Josh Jalinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674.
Looking to lower your taxes or need help securing your financial future? Then Josh and his team are the people for you. They're experts in financial economics with one mission in mind: designed to protect you and your investments. From their 27-point checklist to their one-of-a-kind financial quarterback approach, they help you achieve financial health and guide you through the hard times of high inflation, looming recessions, and stock market meltdown. For financial security, call them now, 888-988-5674, and get your free copy of Josh's book, The Retirement Reality Check.
Okay, we're back. This is Josh Jalinski, the financial quarterback. So here are the income limits for a Roth IRA. So let's talk about, there's like 100 different Roths. There's 4 main types. One is the contributory Roth, where you put in 7,000 to 8,000. So today I'm going to break down everything you want to know about Roths, but we're afraid to ask your mother in school. 8,000, you can put up to 8,000 if you meet the income limit. And everybody says, even Susie Moron, and I agree. No, I'm kidding. That was a mistake. Susie and I agree on Roth IRAs. It's a powerful tool. So if you make under 150 grand, you can make a full contribution of up to 8 grand, depending on your age. You make that contribution, the money grows tax-free, you can pull it out tax-free. Now, when you put money in a Roth, you don't get a tax break. So it's unlike a traditional IRA. Now, we are just days away from the tax filing deadline. And no matter when you're listening to this show, you got to wake up, call our office at 888-988-JOSH. Jim helps people with these things all the time. And people always wait till the last minute. And then, but it's on you guys. You gotta call us 888-988-JOSH. Do the contributory Roth. Now, if you need that extra tax write-off, you can do a traditional IRA or a SEP or a solo. So Roth number 1 is what we call a contributory Roth. If you make under $236,000 and you're a joint filer, you get the full contribution. Now, it goes by MAGI. It doesn't go by AGI. AGI is your AGI, your adjusted gross income. Roth IRA income limits are based on your modified adjusted gross income. And we got this nice gentleman said, my accountant doesn't know this. Your accountant isn't supposed to know this. I mean, I guess they are. Yeah, I mean, I would want my accountant knows this, but, you need an accounting person. You need an accountant to do your taxes. You need us to help you with the planning as it relates to finances around these various rules. You need a strategist. So Roth number 1 is called a contributory Roth. So some people will look into Roths and they will say, I make too much. My accountant said I made too much. And really what they mean is you cannot do a contributory Roth. So if you make over 246 grand MAGI and you are a joint filer, or 165,000 and you are a single filer, you are ineligible to do a contributory Roth, which is our first type of Roth. But you are eligible to do the second Roth, which is a backdoor Roth, which was the question posed earlier. A backdoor Roth is where you make more than the income limits, you put it in a non-deductible IRA, and then you convert at a later date, sometimes immediately thereafter. We can help you with that. The caveat to that, and why I guess this guy's accountant said he couldn't do it, is if you have other IRAs, it doesn't mean you can't do it. It just means you have to follow the pro rata rule. If you need help with that, call us at 888-988-JOSH. You do not want to run afoul of the pro rata rule. Hope all this stuff makes sense. The pro rata rule is basically if you hold other pre-tax IRAs, The IRS calculates your taxes on the conversion based on the ratio of all your pre-tax and after-tax IRA funds. So let's say your pre-tax IRAs are 10% of the total value. You would pay tax on 10% of the conversion. So a large pre-tax balance might make the conversion taxable. The way around that is to roll it back in, wait a little bit, and then do the back door. Because if you don't hold if all of your money is held at a workplace plan, but I think they should do away with the pro rata rule. I've not seen the government really follow this. It's like not something they audit much. So I think they personally should do away with it. Number one. Number two, a lot of people are wondering about the Trump accounts. Do we have people call about the Trump accounts, Jim? No. Nobody really cares about the Trump accounts. I got one question about the Trump accounts. We may do a segment on the Trump accounts. But to me, a Roth is way better than the Trump accounts because money grows tax deferred and can be pulled out tax-free. Unlike the Trump accounts, which grows tax-free till you're like 18 or 22. It's not a bad idea. I'm all for it. I think it's great that they are enlisting the help of private entrepreneurs who are giving voluntarily to this. So instead of our tax dollars being used, it's amazing. So give it a call. Give us a call, 888-988-JOSH. So there are no limits on Roth conversions, which is our third type of Roth, the Roth conversion. So the first is a contributory. The second is a backdoor. The third is the conversion. There is no income limit on a conversion to Roth. And then fourth, am I at four? Is the mega backdoor Roth. So number one, contributory. Number two, backdoor. Number three, conversion. Now you got it on that third point of conversion. I'm not talking about religious conversion here. We're talking about a Roth conversion. You could make $1 million a year, and you could have $1 million in a traditional IRA. You can convert the whole million. Now you got to pay tax on that conversion. So we do not recommend you do the conversion without doing an analysis that we call bracket filling, which means you analyze all of your numbers from a perspective of where you are today. What is your income today? Where are your deductions? And then you bracket fill up to the next bracket you're in, but not a penny over. Now, you might get a penny over. And if you get a penny over or $10,000 over, you're only paying extra on the above the income threshold. Too many of you are also worried about going over. It's like if you go over a little bit, you're fine. You got to pay a little tax. So what? You didn't pay tax on that money for like 40 years. People get all hung up on taxes, and I don't like paying a penny more than I have to, so I totally get it. But you can't perfectly analyze because your accountant usually will tell you after the fact, oh, I owe a lot of money. Oh, you owe a lot of money, and I wouldn't have done the conversion. But here's the thing, your accountant may not even have as much money as you do. Here's the thing, if your accountant is giving you advice on these things, ask them to show you what they have in their IRAs and Roth. And you'll be surprised. Accountant probably is less than you do. Now, accounting is a thankless job, and we love our accountants who listen to the show. But my point is, the beauty of the Roth, now, I'm not always for Roth. I mean, personally, I like pre-tax. I like deferring too. So I agree with some accountants on that. But if you're looking to do a Roth, you generally don't want to go up in a bracket above your own. But if you do, you're only going to pay that percentage on the extra money. So let's say you make a mistake in your calculations and you Roth $10,000 more than you should have. Well, if you're in the 22% bracket, you would pay $2,200 extra bucks. If you were in the 12% bracket, you would have paid $1,200 bucks. So it costs you an extra $1,000 bucks, but then that money's growing tax-free for the rest of your life and your spouse's if you're married. So we will analyze in a futuristic perspective. Now, accountants are historians. They tell you what you could have done last year, but you can't go back in time. We are futurists. We'll work with your accountant and analyze things. But most accountants are very busy. They have to do 700 returns within a week. It's like, so don't blame them. We want to work with them as a part of our team. And if you're an accountant or estate planning attorney and you listen to the show, we're doing a whole thing called Partners in Planning, where we will work as a part of your team. You can work as a part of our team. Call us 888-988-JOSH if you're interested. We would love to work with futuristic, proactive accountants, not people who are waiting kind of after the fact to tell you what you did wrong. But what could you do in November and December to lower taxes for 2025? It's kind of too late now to lower taxes for last year. You can do some things. You do a traditional IRA. You can do a SEP IRA. We'll help you with all that if you call us at 888-988-JOSH. That is why one of our game-changing playbooks is tax planning. Rigorous and deep tax planning. Thorough with your accountant. We will meet with them. And we have this amazing program that will show you the value of all the Roths. And the fifth Roth we'll talk about is the Mega Backdoor Roth when we return. This is Josh Jalinski, the financial quarterback. Don't touch that dial.
Maybe it seems like the prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jalinski, the financial quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check. Josh and his team at the Jalinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the Financial Quarterback and count on Josh Jalinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674.
That was such a short break. Okay, do we get a lot of questions on the Roth, Jim, every week? Now, Jim is battling in the trenches. For those of you who don't know, Jim has 12 different job titles.
That is correct, sir.
Today, he's radio show sidekick. He's the Robin. He's loved by our clients very dearly. He's the guy, last minute, who will do a Roth for you. And in the paperwork and the paperwork with the custodian, we're getting a ton of calls on that. So give us a call, 888-988-JOSH. If you have a question for me, now is the time to chime in, 800-321-0710. The Mega Backdoor Roth is not available to everyone. It can only be allowed if your workplace 401k has the right features. If your workplace plan doesn't have the right features, call us at 888-988-JOSH. We have a guy named Brian Kane who can actually add the Mega Backdoor Roth to your pension document, to your plan document. So in 2026, high earners, 2026, who are over the Roth IRA income limits, this is from Empower.com, who are over the Roth IRA income limits may still be able to move extra after-tax dollars into a Roth account using a mega backdoor Roth strategy if their workplace 401k has the right features. For 2026, the IRS sets a elective deferral limit of $24,500 and $72,000 overall limit on total employee and employer contributions to defined contribution plans, which helps determine how much may flow through this strategy. Roth IRAs are a great tool for retirement savers. So how does it work? You need to check the box on each of the following conditions. Then you may be eligible to qualify for a mega backdoor Roth. Number one, determine the maximum after-tax contribution you can make to your traditional 401k account. Make that contribution. So your plan must allow for an after-tax contribution. So you don't get a write-off. Then you roll over or convert this amount to a Roth or Roth account in your 401k. Our team can help you with this. Unlike with a normal Roth conversion, the principal will not be taxable because you've already paid the tax. It was an after-tax contribution. However, the earnings portion of the rollover will be considered pre-tax and subject to taxation at the time of the conversion. Assuming you keep up on this, shouldn't be much. The idea is kind of you do the conversion immediately after the contribution. Consider all your options and their features and fees before moving money in between accounts. So how do you know if you're eligible? Number one, you participate in a 401k that allows the after-tax contribution. Regular 401k contributions are made on a pre-tax basis. Not all plans allow after-tax contributions. We've helped employees at Johnson & Johnson and IBM do this, and a plethora of, big companies usually allow this. If you're a small business, we can actually add this to your plan document so you can do it as well. So check with your benefit plan administrator before moving forward. In addition, your ability to make after-tax contributions may be limited by IRS non-discrimination rules that affect highly compensated employees. The 401k plan allows in-service distributions to a Roth IRA or transfer of funds out of the after-tax portion of the account into a Roth. If it doesn't, you'll have to wait until after you leave to perform a mega backdoor Roth. So those are the 5 types of Roth accounts. Now, what if you still want to put more money and have it grow tax-free and leave it tax-free to your heirs? What could you do? We could do life insurance. Cash value life insurance, when done appropriately, is another way that wealthy people transfer money to their kids without income tax when they die. The money grows tax-deferred, the cash value in the account, and withdrawals up to basis are tax-free. Money above basis can be taken out via a policy loan. Make sure you don't overloan the policy, and you want to make sure you do it right. So call us at 888-988-JOSH for the 6 after-tax ways to grow money and leave it tax-free to your loved ones. We'll be here for you all hour, 800-321-0710. If you have a question for me, I would love to hear from you. 800-321-0710. 800-321-0710. If you have questions on stocks, bonds, mutual funds. Next up, Michael with a question. What is the difference? And he's on our YouTube, which you can go to youtube.com, search for Financial Quarterback. What is the difference between gambling and investing? That's a good one. Penny saved is a penny earned. That's sort of the basic definition of investing. You are buying. Now, if you mean the stock market, which I think that's sort of more what you mean, how is the stock market not gambling? In gambling, you say, we go to Atlantic City or Vegas. I don't really gamble, but I know, I guess it's blackjack. You raise me or whatever. I don't even do it right. You put a little on red, put a little on black. It's a game of chance. And when you buy stocks, if you do it the right way, and you buy large companies, let's just say the S&P 500 index, which is the gold standard, you are buying the 500 biggest market capitalization weighted stocks in the country. And you're not gambling. If you want to say you're betting on America. You're betting on American ingenuity. But I don't even like to use that phrase because when it's something you can't control, you're scared of and you don't do it. When you gamble, you are trying to predict, oh, this is right and this is wrong, and the house always wins. In stocks, you are buying high-quality businesses. Now, are there stocks that resemble gambling? Cryptocurrencies, for example, things that have no utility, things that have no earnings? Yes. But if you follow good fundamental analysis, which means the company makes money, or the prospects, it's not really a gamble so long as you follow basic principles. Buying low-cost ETFs, exchange-traded funds, buying individual stocks with a cash moat, or buying individual stocks in a sector that you believe is going to go up. So it's not, although both may have an implied sense of chance, if you're diversified, now if you put all of your money in one stock, that's kind of a gamble. If you are not diversified, it's kind of a gamble. If you're buying cryptocurrencies that you know nothing about or stocks that you know nothing about just on a hot tip, that is gambling. But we want to encourage you to actually do research on what you're buying or work with a financial advisor, and we could help you with any of these things at 888-988-JOSH. So I believe there's a big difference between gambling and investing. And I'm sure there are more ways in which they're different. But that's my tip there. Thank you, Michael, on YouTube. Hit the subscribe button on YouTube. Also, every week we have new podcasts out. So all you have to do is subscribe on Spotify or Apple. Many of you are iHeart app listeners, and we love you on iHeart. But make sure you also subscribe, follow, like, and subscribe on Spotify if you have a Android. Do you listen to Spotify? Are you an Android user, Jim? Or what is the Google thing to listen to podcasts? Do you listen to podcasts?
No.
Oh, well, you're not a podcast guy. I thought you were. But so generally, if you're on Google, if you have a Google Android phone, you would download the Spotify app, search for The Financial Quarterback, and hit the follow button or subscribe. Give us 5 stars if you can. Tell us what you like about the show. Also, Apple, the podcasts, just search for Apple Podcasts and then search for us there at The Financial Quarterback. Up next, we're going to give you 5 last-minute tips for 2025 traditional IRA contributions. David still says, I think Jim still has a BlackBerry phone.
No.
Remember when they used to call it a crackberry because it was so addicting?
I had the beepers. Remember the beepers?
Beeper.
Before the phones?
Yeah. I never had a beeper. I always thought it was kind of like a thing for a drug dealer. It was not a, you had a beeper?
At one point, yeah. Before the cell phones.
Well, I guess I probably would have had it if I had children, you know. The beeper, man. You know, I actually think those things are going to be coming back because people want to be disconnected. Like, I don't like being always present for work demands. So I like to be able to shut it off once in a while. So, like, and I hate all the spam you get now, right? Hi, I'm Rebecca. I'm a recruitment specialist at Angel Studios. We saw your resume. No, they never saw my resume. It's like a fake, so much junk phone calls. So Jim with his BlackBerry, Dave fancies himself a comedian. That's pretty good.
That was pretty good. I'll give him credit for that one.
Give him an A on the joke. 5 last-minute tips for 2025 IRA contributions. So we talked about Roths. Next, we're going to talk about everything you want to know about last-minute 2025 IRA contributions. When we return, this is Josh Jalinski, the financial quarterback. Don't touch that dial.
Looking to lower your taxes or need help securing your financial future? Then Josh and his team are the people for you. They're experts in financial economics with one mission in mind: to protect you and your investments. From their 27-point checklist to their one-of-a-kind financial quarterback approach, they help you achieve financial health and guide you through the hard times of high inflation, looming recessions, and stock market meltdown. For financial security, call them now, 888-988-5674. And get your free copy of Josh's book, The Retirement Reality Check.
Josh and his team at the Jalinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the Financial Quarterback and count on Josh Jalinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674.
Okay, we're back. 800-321-0710. If you have any financial questions for me, now is the time to chime in. 800-321-0710. Sarah Brenner of IRAhelp.com talks about these 5 last-minute tips for 2025 contributions. So you got 4 days to do your IRA. Nothing like last minute, right, Jim? Are you thinking about making a 2025 IRA, traditional IRA, or Roth contribution? Time is quickly running out. Call us right now at 888-988-JOSH. We'll try to get it in by the deadline. Here are some last-minute tips as you do the IRA contribution. The deadline for making your 2025 IRA contribution is the tax filing deadline. We'll talk more about what that means when we return. But first, we're going to go to the phone lines at 800-321-0710. We got Joe. What do you know, Joe?
Hello, can you hear me?
Hello.
Hello?
Yes. I can hear you.
Can you hear me?
Yes.
Okay, I'm 65 years old. I have an employment business, and I'm going to have about $350,000 salary, probably $440,000 subchapter S. We didn't put a 401k in yet. We're doing that this year. I took a 7,500 IRA, and I'm trying to figure out. I can't do a cash balance plan because I have too many employees. The way the system is set up. And I'm trying to figure out how to minimize my tax exposure.
Great. Well, one of the things we could help you with is our game-changing playbook on taxes. So call us at 888-988-JOSH for that. But I'll give you some tips. Number one, you could look at a defined benefit pension plan. One of the things we do is we bring in a pension specialist. We audit your whole census, figure out what is the ratio to give to your employees, what is the ratio of yourself. You can look at profit sharing. If you can't do a defined benefit pension or a cash balance, if that's too much, too weighted inappropriately, you could do a profit sharing mix with a 401k. You probably get about a $72,000 to $80,000 tax break doing that. That's number one. Number two, we could consider tax-free things like solo Roths, Roth 401ks, Life insurance is a way to grow the money tax-free, pull it out tax-free. Now, you're not going to get a deduction on that, but if you're already hurt with taxes today, let's have that money grow tax-free tomorrow. Number 3, we could look at real estate strategies, buying certain properties. You could take advantage of cost segregation. Number 4, we could look at solar. Solar credits are still around for your corporate business. Number 5, we could look at what are some things we could do to take extra write-offs on your business? Acceleration, bundling expenses. Number 6, charitable contributions. 7, do you add your children on payroll? Do you add your wife on payroll if you're married? You know, do you give them a job? Do you have a board of directors? There's all these types of little strategies you could do. We talked about real estate, which is very powerful, where you could buy different real estate, take advantage of cost segregation, and have the cost segregation tax benefit actually give you your down payment on the property. That could be huge. So there are so many different tax reduction strategies that you could legally deploy. And we have a whole team. That's why the radio show is called The Financial Quarterback and Podcast, where when was the last time your accountant, your attorney, your financial advisor met and said, what's best for Joe? And the answer is usually never. Kind of sitting around. They're all kind of worried about their things, but let's build a concerted plan on what's right for you. Could even be buying a business, getting your saleable value. You might say, I'm 65, I want to get out of the business. Yeah, but you could buy another business in your field, get ready for a sale. Let's say you want to sell your business in 3 years or 5 years or 2 years. Get a greater saleable value. I was talking to a company that helps small businesses, 1 to 15 million in annual EBITDA, and they help them get ready for a sale. So by you, let's say, buying a competitor, that cost is a write-off against your income. And then it makes your saleable value much bigger. So there's all these types of tricks and tips we'd be happy to give you. Call us at 888-98-JOSH. Any other questions, follow-ups on that?
Am I eligible for QBI, Subchapter S?
Yes, you should be. And there are different QBI strategies depending on. We have some employers who are ineligible for QBI, and then we try to think of, well, what could they create a second business that is eligible for QBI? Could you buy one?
Right.
And then you can use that write-off. People don't know that. Like, if you want to buy a business, that's a write-off. So if you have a really high tax year, you could use a down payment to buy a business, and if the business is a good business, a lot of people are getting out of business, right? Boomers. Now you might say, I'm 65, I want to get out of business. But we build that into your overall plan. Maybe you want to get a bit out of business in 3 years, so we accelerate your deductions now. And this is where you need a team. You need an advisor, an attorney, and an accountant. I'm not giving legal or tax advice, but we work as your virtual kind of family office where we say, what's best for Joe and his family? There's a lot of cool stuff you could do. I'd love to meet and show you how. Okay?
Appreciate it.
Wonderful call. Next, and call us, 888-988-JOSH during the break. Next up, calling us on our listener call-in line is Mark. And folks, if you are listening to the show and you like anything, call us, 888-988-JOSH, for our legendary retirement game plan. We will cover the 6 game-changing playbooks. What we've talked a lot about today is tax planning because we're near tax day. But we also have investment management. We have legacy planning. We have healthcare planning, housing wealth, and income planning. So go ahead, Mark.
How are you? How you doing? I like your show. It's very good.
Thank you.
Very good. I'll be 73 October, and I have traditional IRAs. I have to take out 5 different ones, and then I got a 457 plan that they told me I have to take out required minimum distribution Can I do anything with it, or I have no choice but taking it out of my traditional account?
Well, you may have you may not have a choice for this year, but you could have a choice for next year. Number one, we want to consolidate those IRAs. Maybe having 5 different RMDs that you have to manage seems like a lot, and you can make it very simple. Number one. Number two, we could look at bracket filling. That's where you Roth up to your next income limit. That way you reduce your RMDs in future years. You could also avoid RMDs with 2 other strategies. Those are the qualified charitable distribution, if you're inclined to give it to charity. If you're not, okay. Number 2, you could look at doing a QLAC. That will defer your RMD till you're 85. That's kind of a cool way to avoid RMDs. The next thing is you could look at buying an Airbnb or rental property or beach house in the Outer Banks or wherever you want to buy a vacation home in the Poconos. And you could take advantage of something called the short-term rental deduction, where you actually get that second house you've always wanted maybe, and then you take advantage of cost segregation. You use your IRA money to do that, and you actually can lower your taxable income when you take a Roth conversion, and then literally the tax benefit could pay for some of the tax upon the conversion. Again, that's a lot to just kind of throw out.
So this year, I can't do anything, right?
No, you might be able to. No, you might be able to. Meaning, let's say you have an IRA today, 2026, right? Let's say you have 400,000. I don't know. How much do you have in an IRA?
Maybe 80, 90, could be more.
Okay.
And then I got a 457. The 457 is from the city in New York.
Sure.
I cannot combine that with my other 4 or 5,
you can.
institutions.
You can make a 457 rollover to an IRA, because the only reason to keep the 457 is if you're under a certain age, you avoid the 10% penalty. A lot of people work for the city, state, police, fire.
Well, I'm retired already. I'm retired.
Yeah, so the benefit of keeping it in the 457 in some cases is like you avoid state income tax. In some cases, I don't know if you do, in some cases, there are provisions that we research your plan. But let's assuming, what's the total value of all pre-tax dollars? Do you know?
I have to take out over $30,000 in RMDs.
Okay. So you have a significant amount. You probably have at least, 800,000 in pre-tax. Whatever the number is. You could take 200 out of your IRA, pay tax on that. Then you could use that 200 to buy a property that you then rent out. That 200 grand could be used, and you could do a cost segregation study, and you could literally get that 200 grand back when you file taxes next year, because you could reduce your taxes by cost segregation. Powerful strategy. I don't know if it's right for you. Call us at 888-980-JOSH. We'd love to meet with you. But don't take that fatalistic approach of, I'm 73, it's too late. No, it's never too late. Because it's too late if you do nothing. Like if you say, hey, I don't want to do tax planning strategies, I just want to kind of sit around and pay tax. Yeah, it is too late then. But it's not too late if you do the strategies. You could do Roth. You could do the cost segregation benefit I just told you about.
Right.
And even if you don't want a second property, the rents can pay the mortgage, and then your down payment could literally be paid for by your IRA, and then you get the tax back by doing the cost segregation. So huge benefits. And we will work with you. If you don't have a CPA, we'll get you a good CPA. We'll refer you to one. We'll work with that CPA or accountant to maximize the benefits, along with different financial planning techniques that we could do. So I hope that helps you. Any other questions, Mark, on that?
Yeah, and if I don't do anything, buy properties or anything, I have no choice but taking out my RMDs, for my traditional.
No, you could do the
That's the only
QLAC. If you don't want to buy properties, you could do the QLAC. And you don't have to do an RMD if you do a QLAC. You could do the QCD, and you don't have to do an RMD on that. So there are some ways to avoid the RMD. And then the third would be Roth. So I'm giving you 4 concepts. You don't have to make a decision today. Just call us and figure out, build a plan. You have till the end of the year to take the RMD, right? Or did you turn 73 last year, so you have to do it by April the 1st? So it depends on.
No. This year I'll turn in 73, so I have to do it by December 31st.
Okay, so you got some time to figure out what you want to do. So call us, 888-988-JOSH. We will take a short break, then we'll be back with your calls, 800-321-0710. A lot of you are calling for the 6 game-changing playbooks. Call us for the legendary retirement game plan. We covered tax planning, investment management, housing wealth, healthcare planning, legacy planning, and income planning. 888-988-JOSH. 888-988-5674. If you call us, you get my book, Retirement Reality Check, as a free gift.
WOR New York and WKTU HD2 Lake Success.
An iHeart radio station.
Guaranteed human.
New York is flipping the script on how it wakes up. Curtis Lewa and Larry Menti in the morning, 6 till 10 weekdays, only on 710 WOR, the voice of New York.
An iHeart radio station.
It's 54 degrees at 10 o'clock. Good morning, I'm Bill Trefiro. President Trump is warning that U.S. warships in the Middle East are being reloaded in case the U.S.-Iran peace talks fail today. In the interview with the New York Post, Trump said, quote, "If we don't have a deal, we will be using them, and we will be using them very effectively." When asked about the prospects for the Saturday peace talks, Trump said, quote, "We're going to know soon." Meanwhile, the New York Times reports that U.S. officials say Iran hasn't been able to reopen the Strait of Hormuz because it can't locate all the mines that it planted in the waterway. The narrow strait that's critical to worldwide oil shipping has been restricted since the start of the U.S.-Iran war. U.S. officials tell the Times that the strait has remained restricted because Iran planted mines in the water that it can no longer locate and lacks the capability to remove. A massive fire last night in Queens. Andrew Whitman has that story.
Flames broke out at a business on 130th Street in College Point, Queens, around 7:30 p.m. Friday. The address given matches a restaurant supply store. There's an attached lumber and flooring supplier next door. That was apparently the kindling as the fire went to 5 alarms. Hundreds of firefighters spent hours putting it down. Police in Mount Vernon, all the way in Westchester, put out a notice about the smell from the blaze. The businesses were closed at the time. An investigation is underway.
The hunt continues for the gunman who shot and killed a man as people were leaving a funeral service at a church Friday in Jamaica, Queens. Police say the shooter rode off on a city bike after firing several bullets into Richard Carter just after 2 p.m. The 49-year-old was taken to Jamaica Hospital, where he died. Police say the shooter was last seen wearing a DKNY jacket, a colorful sweatshirt, and orange sneakers, and took off northbound on 170th Street. The Orion spacecraft that took 4 astronauts on the Artemis II lunar mission is now secure on the deck of a U.S. aircraft carrier. The crew of the Artemis returned safely Friday evening with a splashdown in the Pacific Ocean near San Diego. In sports, the Knicks beat the Raptors 112-95 at the Garden. A Celtics win means the Knicks will have the 3rd seed in the playoffs. New York closes the regular season against the Hornets tomorrow at the Garden. The Nets lose in Milwaukee 125-108. Brooklyn's season comes to an end tomorrow in Toronto. The Yankees lose in Tampa 5-3. That series continues tonight in Florida.
Here's your WOR Weather Channel forecast. Plenty of sun this afternoon with gusty winds at times out of the northwest. As the high gets close to 62, the low tonight should fall into the low 40s under a clear sky. Clouds will increase into Sunday afternoon with a high of 58, and then dry and warmer starting off the week Monday with a few breaks in the clouds and a high approaching 76 degrees. I'm meteorologist Jeff Marr.
Next News 11, bulletins at once. Wake up with Curtis Lewa and Larry Menti in the morning, 6 to 10 a.m. on Monday.
Mark has one more question.
On 710 WOR.
Tired of losing money in the stock market roller coaster? Frustrated with the government taxing you into oblivion? Worried about inflation? How do you prepare for so many financial uncertainties? Welcome to the show that will help you develop your game plan. The Financial Quarterback with Josh Jalinski. Josh is a noted financial advisor and president of the Jalinski Advisory Group, and he's here to answer your questions. Call into the show at 800-321-0710. 800-321-0710. Now let's kick off your financial future. Here's Josh Jalinski.
Talking about 5 last-minute tips for 2025's IRA contributions. Even though it's 2026, you have just 4 days to make your IRA contributions. And Mark has another question. Then we got Barry, who's trying to convince his wife to retire. That'll be a great caller. Go ahead, Mark.
My wife is not 73 yet. She's, 69. She has traditional IRAs also. Is it worth? Does it make sense to switch over to the Roth or just leave it the way it is?
It makes.
She's not going to buy no property, nothing like that. Regular housewife. Does it make sense to switch it over to a Roth IRA before she gets 73?
Oh, yeah. It depends on your income tax bracket. So what we'd want to do is you call us at 888-988-JOSH, and we do what's called the bracket filling test. So, because what happens is when she hits 73, right, and you're, 77, your RMDs are going to be double, right? So you're going to pay double tax. So what we would want to do is convert a little bit every year, but up to your next bracket or up to your current bracket, that is called bracket filling. So if you're in the 22% tax bracket and converting 50 grand keeps you within the 22% bracket, then you're not over-Rothing to avoid tax later in life. So you definitely want to consider the concept of bracket filling if your wife is a simple housewife and doesn't want to get involved in real estate. But I gave you that real estate tip in case, I don't know about you, I like real estate more than paying income taxes that I don't have to. So that's why I gave you that tip. Yeah. But Roth IRAs are a great tip as well. If you're just a regular person, don't want to get involved in any of that, Roth strategies are great. Life insurance could be also good because there's wonderful tax attributes of life insurance. And then the other tip is if you have to take the RMD, right? Let's say you can't avoid it. What you could do is something called a QLAC and avoid the RMD till you're 85. Another thing, and that stands for Qualified Longevity Annuity Contract. And that ensures you never run out of money. And that's a way to avoid an RMD. The other thing you could do is avoid paying taxes twice. If you're taking the RMD, that's paying tax once. But where do you put the RMD funds so you don't pay it a second time? I'll talk about that later, but call us at 888-988-JOSH and I'll show you more about that. So where you avoid, meaning if you take an RMD out, put that RMD in a stock or ETF that doesn't pay dividends. Don't put it in your bank where you're just going to pay what's called the 1099 INT form, literally paying tax twice in the money. Put in an insurance policy where it grows tax-free, and when you pass, it goes tax-free. Don't make the mistake of putting that RMD into a taxable account. Okay? Hope that helps.
So a mutual fund, ETF mutual fund?
You don't want to be in a mutual fund or ETF that would pay a dividend because not be taxable. You'd want to buy an ETF or stock or mutual fund that wouldn't pay a dividend, so that way you're not paying taxes every year on money you're not spending. That's another great tax tip. So I'm just chock full of good stuff today. So thank you, Barry. You have a great voice for radio, and I hope to meet you someday. Give us a call, 888-988-JOSH for the legendary retirement game plan. Next up, we have Mark, right? No. This was Mark. Next up, Barry. Go ahead, Barry.
Yeah, you mixed us up. How you doing?
Hey. Go ahead.
Hello?
Hi, go
Can you
ahead.
hear me?
Yes, I can hear
Okay,
you.
yes. Okay, I'm just basically trying to convince my wife that we will be able to retire comfortably. So let's say if we have our house is paid for and you got about $2 million in between IRAs and 401ks, and the rest of it's in either in some investments and a lot of CDs. That's another $2 million. I'm 62 and a half, and she's about to turn 65. So, any thoughts?
Well, my thought is, if you have more than enough money relative to your income, I don't know what your income needs are, but one of the first pieces of our legendary retirement game planning is income planning. So if you know your expenses and you know your income off of your expenses, then you should be able to retire. And we have a whole program that can give your wife and you retirement income clarity, where can you afford retirement? I don't know you till I meet with you, but if you call us, I'll do a whole retirement readiness review, and we could even have a little fun with you on the show. I have something called the Retirement Pressures Calculator, which is a simple, 45-minute discussion where we go over what are the retirement pressures you are going to face, and can you afford it? Do you know how much you have in expenses?
Yeah, I'm going to say, including the travel we plan on doing, is about $110,000 a year.
Is that gross? Like, is that including income tax or no?
That is not including income tax.
Okay. And what do you pay in state and federal income tax year in your state? Maybe 20 grand?
Well, I mean, yeah, well, it's hard to say. Say if we retire, that's all going to go away. It's just going to be, whatever is in our investments.
And you have how much in investments? 2 million?
4.
4.
4 altogether, and that doesn't include. And the house is paid for, so that's not part of it.
Yeah, I mean, why don't you retire? I don't know your whole situation, but I mean, how long are you going to work for? Till you're dead? Like, not to be.
No, my intention is to stop in 2.5 years, and she could stop at any time. And I'm thinking at least stop when I stop.
I mean, I'm kind of. And how much is your Social Security income?
Oh, well, nothing yet. I mean,
no. But if you and your wife retired today, what would be your Social Security income?
I think about combined about $5,500 a month.
Okay. So what's that, like 66,000 a year?
Yeah.
Yeah, I don't know why you don't retire now. I mean,
I would love to.
Based on what I'm seeing.
My fear, the reason I'm holding off basically because I don't want to have to for the Medicare.
I get that. That is yeah, but I mean, I'm running the numbers. 4 million at a retirement age of, you're how old? 60 what? 2?
62 and a half.
I mean, at a I'm having you retire at the worst period to retire in the last 50 years, which was the year 2000. If you had a blended 60% stock, 40% bond portfolio, your money doesn't run out. This is if you need 130 grand to live. Now, I didn't give you inflation. You should come in for a retirement readiness review where we go over income planning. But I don't see a problem for you to retire now.
That's what I keep telling her.
What if you live till you're 71?
I also got to throw in, I think I have a small pension from a prior job actually coming in, which would be, about another $1,500 a month.
Well, that's 18,000. So between Social Security, right? And your problem is going to be taxes when you retire. It's not going to be, can you afford retirement? It's going to be all the taxes
Right.
you're going to pay in your RMDs and IRAs. But you're at $1,500 a month. So you're at $84,000 a year in Social Security and pensions. You've told me you
Yeah.
needed about $110 to live. Let's say 20 grand of that is income tax. So you need about $130 to live, right?
Yeah.
I don't see a problem with you retiring today. You know, let alone, I mean, obviously every year you delay, you know, you're probably going to need more money. Like if you were to retire now, the first few years of retirement, you're going to have to pay for like COBRA or medical. So you will need to map that out. But I don't see a problem. But I would come in for a review, 888-988-JOSH. Bring your wife. You and your honey should be in on the money. And there's something more, you know, that you're not telling me that she's worried about. She's worried about you dying early or this or that. You know, like there might be some intuitive thing. What about long-term care? I mean, that's why there are 6 game-changing playbooks. Income planning is one thing. But she might be worried about, what if we get Alzheimer's or dementia at 85? You know, who's going to take care of us? So
well, we have long-term care also. So it's like, you know,
I mean,
there's no reason in my head.
I'm looking, but it might be in hers, right? So that's why I'm saying you and her, call us at 888-988-JOSH. We get to the heart of what you're trying to achieve, right? We get to the heart of what she's saying. You might be saying we have enough money, but she might be worried about things that you're not verbalizing, right? So, we'll go over your retirement pressures. We'll build out an income plan for you. Call us at 888-988-JOSH, okay? But I don't.
All right.
I don't.
I will do that.
I don't see a reason for you to not retire, though. Even today, I'm doing numbers, and even if I give you 150 grand a year, right? Because you got to pay for extra health insurance. That is a problem. Sometimes it's emotional, right? Like, you know, maybe she's worried about something. I don't know. But I gave you 150 grand of inflation. Call me and we'll give you this program, this retirement pressures calculation for free. I'm giving you 150 grand a year, right? Inflation adjusted. And starting at the worst 3-year period since the Depression, year 2000, 2001, 2002, I don't have you running out of money. So, I mean, could things be worse? Yeah, but I think we have to get to what is the heart behind your wife's concerns. You follow? You might be trying to use logic to win this argument. But maybe it's emotional. Maybe she's going to be depressed, not going to work every day. So we got to figure out what's the heart behind your plan. That's why our motto is all heart and no regrets at the Jalinski Advisory Group. So we'd love to meet with you and your wife. Any other follow-up questions to that, Barry, before we go to the break?
Man, I'm good. I appreciate your time.
Yeah, thank you so much. And call us, 888-988-JOSH. We'd love to meet you and your honey on the money decisions. 888-988-JOSH. During the break, call us for the free book Retirement Reality Check when you schedule and keep your legendary retirement game plan. Up next, we're taking more of your calls all hour at 800-321-0710. We're back after these messages.
Looking to lower your taxes or need help securing your financial future? Then Josh and his team are the people for you. They're experts in financial economics with one mission in mind: to protect you and your investments. From their 27-point checklist to their one-of-a-kind financial quarterback approach, they help you achieve financial health and guide you through the hard times of high inflation, looming recessions, and stock market meltdown. For financial security, call them now, 888-988-5674. and get your free copy of Josh's book, The Retirement Reality Check.
Josh and his team at the Jalinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to The Financial Quarterback and count on Josh Jalinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674.
We're back. Taking your calls on all matters financial at 800-321-0710. I always got to read my emails from my, she calls me her guru. We love this woman. She's amazing. She goes, I can hardly contain myself. I get to listen to you and Jim. You know, we had the segment Ride the Wave with Dave. I want to have a segment called Jim on a Whim, where Jim shoots down an idea. What people don't know about Jim is very pleasing and very sweet, very nice man. But there's sometimes when he listens to a guest we have, where if there was like a button that could bring that trap door, I kind of think of like Inspector Gadget.
Yep.
He would get rid of the guest. I've never said this. Have I ever said this on the radio?
No, probably not.
So I want to get a segment. We got to tell Nicole, our wonderful producer, what to do with Jim on a Whim. We want a segment, Jim on a Whim, where you play a clip and Jim's like, nah. He has this amazing intuitive sense of like, get rid of him. Get off the phone. You know,
Yeah,
not a caller. We love our callers.
We love our
Call
callers.
us at 800-321. No matter who you are. If you're a caller or a listener friend, you can call us at 800-321-0710. We're not talking about that. But there's guests we have.
Yes.
Like we've had these guys. We had this one guy. I'll name him. He's nameless. I don't want to offend him if he's ever listening. The guy was supposedly like the #1 retirement planning podcaster in the country, right?
Yep.
He looked like John Tesh. And Jim did not go for him. Don't say his name, but how was he? Wasn't he strange?
Yeah, he wasn't.
We did the show a few years ago, but the guy acted weird. What happened with him?
I don't know. He just wasn't interacting properly with you at all. It was just very boring. It was almost like he didn't want to be there.
Yeah, it's like, don't show up.
Yeah.
You know, or like the Bob Grant, get off the phone, you stupid, whatever.
Get off my phone.
You know, it's funny. So, but June loves Jim on. You could make me a very happy woman. Listen to this, Jim. If you would have Jim with you every Saturday.
Oh, boy.
The interaction is perfect. Yes, but I'm a little league coach, June.
That's right.
When my kids are older, I'll go back to every... You know, that's why you guys got to listen every week, because you'll get me, you know... Every show is live, unscripted, uncensored, shockingly raw, and new. Every week we give you a new show. But if sometimes we're not taking callers, it's, you know, because I'm going to the ball fields. I looked like a sight out of, and I'm going to finish the email first. And you look very handsome today. Okay, thank you. Your tie is just perfect. Yes,
yeah,
she got me this tie. This is a beautiful tie. But I will tell you, the tie is more beautiful to my dear listener friend in person. It's a Lily Pulitzer men's stuff. It has like a stag. It is really something. It's like my favorite green color, my favorite blue. You can't really see it on the YouTube in its full glory. It is one of my favorite ties of all time. So you did great. I will take ties. You know, people tell me like,
and cufflinks.
I had somebody drop off wine. And I don't really drink wine. Unless it's like, you know.
Made by Josh.
You know, but
Right?
One time somebody gave me a box of wine that said Josh.
Well, that's a
I don't
wine
even drink
manufacturer.
wine. But if you want the way to my heart, buy me ties and cufflinks. I can have an unlimited supply of cufflinks because I lose them regularly. Cufflinks, and you need a cufflink, and you need what else? A tie. Yeah. I will now have my breakfast with Josh and listen intently. Thank Jim for me for spending his Saturday morning with you. Oh,
Anytime. Anytime for her.
Anytime for her. So I looked, you got to see this. People always love the personal interaction on the show. Everybody has to see this. I was a sight to behold. My beautiful listener friend, I'm going to send you an email of my little boy. So my little boy, Jetty, has the most beautiful long blonde hair. He's like a model. And amazing. But we don't want our kids to be child models. But he did great. He was the defensive player of the game at 4. He made some amazing stops, some good hits. And then I looked like a real joker out there. You got to watch me. I look like a cartoon character. I had a purple shirt on, a purple hat, and teal pants. Look at this. Look at this, Jim. I looked like some type of cartoon character coach because we are the Arizona Diamondbacks. And so I bought their City Connect jersey, which is purple. So you got to watch. What do I look? I look like, the Hey Kool-Aid guy.
Yep.
I look like the Hey Purple Kool-Aid. Watch this. Watch this. Look at this, Jim. Come over here. And, I look fatter than I actually do in real life, probably because I wore something under it. I look like the Hey Kool-Aid guy, but purple. You see me? No? Okay, he doesn't see me. But it's just at the beginning of the clip.
Oh, yeah.
So it's a cool jersey. It's purple with teal. I don't actually like. It looks kind of. You ever see a picture of yourself and you're like, oh man, I look like this. Yeah. What happened? So I have this shirt. It's called Serpientes with teal writing and purple, and it's pretty cool. And then I'm a T-ball coach. Next up, we got Sandra. Go ahead, Sandra.
Good morning.
Good morning.
I'm a retired city worker, and part of my pension is disability. I read somewhere that you can take disability money and put it into a Roth IRA.
Can you put disability
and that
income?
Disability is not taxable. I don't know what kind it's not taxable though.
Is it disability from the state?
From the city.
Yeah, I'm not sure. I'd
From
have
my
to look.
pension, I think.
Can you put disability income in a Roth IRA? Do you have other wages for the year?
I'm not working. I'm retired because of the disability.
Now, you can contribute to a Roth. Okay, this is from Berger and Green while on disability, but the disability income itself generally does not count as earned income required for contributions. So do you have other part-time work or other taxable income?
I have taxable income, yeah, but I'm not working.
The IRS requires compensation, wages, salaries, or self-employment income to contribute to a Roth. So if you had any IRS compensation, you are able to put money into a Roth for the year.
But it has to be income.
No, let's say, what did you get paid in wages, compensation, or salary, or self-employment income? Do you know?
I'm sorry. I don't understand.
If you don't know, just call us at 888-988-JOSH. We can help you. So there's a lot of variabilities here. If you're disabled, are you married?
No.
If you're married, you can actually do what's called the spousal Roth IRA, even if you have no earned income. And if you have employer-provided long-term disability payments reported on W-2 as taxable wages, sometimes people have disability attributed to them that way. Do you know how your disability was attributed? Was it on your W-2?
Part of my pension. Yes. I get two different.
Then that might
W-2s.
qualify. So I would come in 888-988-JOSH, and we can work through with you. You're kind of a special case. So we'll get our accountant or your accountant involved, and let's get a Roth before April 15th, okay? And if
okay,
you missed
thank you.
the deadline, there's always next year. But call us at 888-988-JOSH. During the break, we'd love to meet with you and help you with your disability income. So you can contribute to a Roth if you're disabled. The answer, though, is it depends. It depends on the earned income requirement. If you have part-time work, that can count. If you have long-term disability, that can count as well. We're going to take a short break, and when we return, we'll talk more about the 5 last-minute tips for 2025 IRA contributions when we return. But I'd love to hear from you at 888-988-JOSH during the break. 888-988-JOSH. Give us a call, 800-321-0710. I'm going to give you one of the tips is watch the deadline. The deadline is Wednesday, April 15th, 2026. Do you have an extension? That will not buy you more time. So even if you have an extension for filing your 25 federal income taxes, your deadline for making a traditional or Roth IRA contribution is still April 15th, 2026. So you have 4 days to do it. That's tip number 1. Tip number 2, know your limits. We'll talk about that when we return. This is Josh Jalinski, the financial quarterback, talking about 5 last-minute tips for 2025 IRA contributions. This is Josh Jalinski, the financial quarterback. Don't touch that dial.
Maybe it seems like the prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jalinski, the financial quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check.
Looking to lower your taxes or need help securing your financial future? Then Josh and his team are the people for you. They're experts in financial economics with one mission in mind: to protect you and your investments. From their 27-point checklist to their one-of-a-kind financial quarterback approach, they help you achieve financial health and guide you through the hard times of high inflation, looming recessions, and stock market meltdown. For financial security, call them now, 888-988-5674. And get your free copy of Josh's book, The Retirement Reality Check.
We're back. This is Josh Jalinski, the financial quarterback. The next tax filing deadline tip is know your limits. The maximum that you can put into an IRA, traditional or Roth, is $7,000 if you were under 50 in 2025. If you reached age 50, even on December 30th, 2025, the maximum contribution is $8,000. The annual limit is aggregated for traditional and Roth IRAs. The amount you cannot contribute $7,000 to your traditional IRA and $7,000 to your Roth in 2025. But you could do it if you're married, and you could do a spousal IRA. So next up, we have Gordon. I missed you, Gordon. Go ahead.
Yes, Josh. Welcome back, sort of. I'm sorry. I'm glad I have the opportunity to talk to you today.
It's always good to talk to you.
In today's somewhat challenging investment environment, do you think a stock market investment or a fixed income investment would be more prudent at this time if one wanted to invest?
I think both. We're going to have David Ranson on in the coming weeks. Is he a favorite guest of yours? You like David Ranson?
Yes, very cogent, smart individual.
And I don't know how old he is. He must be like 80, 85. But he is the best. We've had so many people on, right, Jim? And we've had people who say they're the greatest predictor. I think he is predicted better than almost anybody else, right?
Yes.
He's like the oracle. No, I never heard of him before. I had a listener 10 years ago say, you got to have David Ranson on. And I really just had him on due to this listener friend who's kind of on my unofficial board of advisors. Unofficial, unsolicited, and unasked. But we love the questions. And he was like, you got to have David Ranson on. And amazing listener friend who's like like a father to me in a way. After my dad died, he's an amazing guy. Call him up sometimes, get tips. He said, you got to have Ranson on. We had him on. He has been prescient on everything, on gold, and I have been too, right, Gordon? Gordon, when was my gold call? You're my one source since my father passed away. What was my gold call? What was it, 1100?
1074, I believe.
Wow, he knows the exact. Good job, Gordon. So at 1074, I was just like plowing to gold because money printing. So David Ranson has this sixth sense of, he calls it the star portfolio. We call it our strategic portfolio, where you do different asset classes for different times to have a more conservative risk-adjusted return. So I would not throw out the equity markets. So what do we do in our strategic investing portfolio? Number one, call us at 888-988-JOSH, because I don't think you could do it alone. Can't go it alone in retirement. Number one, we have an energy percentage. Number two, we might have a gold percentage. Number three, we're even looking at having a percentage, 1 to 5% in Bitcoin. Why? Because there is better risk-adjusted returns when you have different asset classes. If you don't want Bitcoin, we could exclude that. But as money printing continues and we have this stagflation, 70s styles economy, what's going to do well? Energy, nuclear potentially. We do have some AI composite. We have some tech, but it's not more than 20 to 30% of a portfolio. So it's not all a Mag 7 portfolio. We had the guy, with the portfolio last week who didn't do Mag 7 type stuff, but you need to have some tech, in my personal opinion. So you have different asset classes and different strategies, different strokes for different folks, but different strategies for different times. So you can't just put it all in tech and expect you to do well in a stagflationary scenario. I do like some fixed income investing. I like fixed income programs, certain bonds, not all bonds, certain municipal bonds, certain treasury bonds, certain government-backed bonds, certain fixed annuities, fixed indexed. You can get a fixed annuity at 5 years paying 5% right now. No internal fees. Just a surrender charge if you cancel early. There's a lot of different things you could do. You could do indexing strategies where you have a floor. So if put your money in these indexing programs, and there's indexed CDs, indexed notes, indexed annuities, and the principal falls in the overall S&P, and you're linked to the S&P, your principal stays even. You don't lose principal. Now you got to watch the prospectus, you got to read the contract, got to make sure you understand about fees, surrender charges, etc. I generally like ones only with lower fees. So give us a call, 888-988-JOSH. If you're worried about this uncertainty, there are stocks that have done well. Defense stocks, aerospace, energy, gold, and also the market's rebounded the last 10 days pretty strongly. So we're looking like we've seen the worst of the war. And those could be my famous last words. I'm also going to give you an update on my market outlook. My market outlook is nobody knows what the heck's going to happen. Now, if I was to pretend I know, meaning, and we all do that, right? We opine. No one knows the exact future, right? Except God. So, with much prayer and consideration, I take to my job. But, so that's why I believe you build an anti-fragile, multi-asset class portfolio. Because some asset classes will do well in some environments and some won't. That makes sense? But,
sure.
We may have hit the low, which wasn't really that big of a low, right around March 30th. We've been up, S&P's been up 500 points ever since. Nobody wanted to invest then because the world looked bleak. Now, technical analysts are suggesting that April 20th could be the low. But nobody knows. I mean, what we are doing in our tactical program is we are prepared to go to more cash should the markets fall. Like if I'm a student of the markets, I could see, 6,700 this week. Market go to 6,500 as the new low, and then we continue to rally. I could also see a scenario that's bearish and the market continues to go down into April 20th, late April. But what's very interesting is this downturn parallels last year. It also parallels 2020. The surprising thing is it really wasn't that low from peak to trail. It was a drop of about 600 points or 8% from the high. So could that be it for the downturn? Maybe. I don't know. I do think that Iran, the growing distaste for the Iran war is growing. And, I think Trump gets that. So he's caring about the midterms. And I could certainly see the ceasefire turn into peace and the markets rally and just boom from here into year end. But we'll have, we always have about 1 to 2 times a year where people freak out. Right, Jim? Yes. It's like clockwork. Yep. Sometime in the fall, sometime in the spring. That's typically when we see it. Around now or a month ago, and then around the Yom Kippur cycle that we see. The old sell Rosh Hashanah, buy Yom Kippur adage. It's not always right. Like there's the whole sell in May and go away. I don't necessarily agree with that. Sometimes, right? But you can't base your life on prognostications. That's why you have to build an anti-fragile portfolio. Doesn't mean everything is going to go up in tandem. It means you are presenting yourself in such a way that if a downturn does occur, you can handle it mentally. I do on a bullish trend, Bitcoin, the low in the Bitcoin market, year-to-date low, Bitcoin's down 16.94% for the year, but the low was about 62,000 April the 4th, and we've not hit that low since. So that's a very good market indicator. I look at Bitcoin, BTC-USD on Yahoo Finance as a indicator of what's going to happen in the short term. I've not done any scientific analysis, but just observationally, Bitcoin tends to bottom before the general market bottoms and tends to rise as the general market is rising. Hence why I'm cautiously bullish after April 20th, and I want to be in on the next rally. So give us a call, 888-988-JOSH, 888-988-JOSH, if you would like to learn more about our strategic and tactical anti-fragile portfolios. Any further follow-up questions to that, Gordon?
Yes, Josh, one more thing. Do you think that the midterms this year will have a inordinate effect on the results of the midterms will have an inordinate effect on the stock market and the fixed income market?
Sure. Yeah. I think but I don't think it's going to be that bad. I mean, if the Democrats win, you're going to have gridlock. The market generally likes gridlock, right? If the Republicans can eke out a victory, which I don't see how, I think they'll retain the Senate, lose the House probably. What you will see is markets will react positively to that because it kind of neutralizes, so you won't really have any kind of like a lame duck last 2 years of Trump's term. If the Republicans lose the House, he'll get some things done, but it'll be bipartisan stuff. So I'm more worried about interest rates going down. So the time to buy, fixed income might be now, if you're looking into that, because we know with the new Fed chair coming in, they want to lower rates. And then worry that they lower them and then we still have persistent inflation and the market goes down that way. That's what it's kind of keep me up at night. So we'll thank you so much for the call, Gordon. We're taking your calls live, folks, at 800-321-0710. If you have a financial question for me, 800-321-0710. And if you want the legendary retirement game plan, give me a call right now at 888-988-JOSH, 888-988-5674, 888-988-JOSH. We'll be back after these messages.
Josh and his team at the Jalinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to The Financial Quarterback and count on Josh Jalinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674.
Looking to lower your taxes or need help securing your financial future? Then Josh and his team are the people for you. They're experts in financial economics with one mission in mind: to protect you and your investments. From their 27-point checklist to their one-of-a-kind financial quarterback approach, they help you achieve financial health and guide you through the hard times of high inflation, looming recessions, and stock market meltdown. For financial security, call them now, 888-988-5674, and get your free copy of Josh's book, The Retirement Reality Check.
Okay, we're back. This is Josh Jalinski, the financial quarterback. If you have a question, give us a call now, 800-321-0710. If you have questions on stocks, bonds, annuities, mutual funds, now is the time to give me your question of the day. We're going to go back to the 5 last-minute things you got to do for your 2025 IRA contribution. Number 1, watch your deadline. Know your limit, $7,000 if you're under 50, $8,000 if you're over. Number 3, you got to have taxable compensation, or if you're married, you may be able to use your spouse's earned income to make your IRA contribution. Your IRA contribution generally may not exceed your taxable compensation for 2025. Number 4, check your income. When your modified adjusted gross income exceeds $150,000, if you are single, or $236,000 if you are married filing jointly, your ability to contribute to a Roth begins to phase out. But there are no income limits for a traditional IRA contribution, which is why the backdoor Roth is so popular. And number 5, maximize your benefits. Many people miss out on the benefits of IRA contributions simply because they do not understand the rules. This is particularly true when it comes to how participation in a company plan affects your IRA contribution. Here's some good news. Your participation in your 401k at work does not affect your eligibility to make a Roth at all. More good news, if you and your spouse, if married, are not active participants in a company plan, you can fully deduct your traditional IRA contribution regardless of how high your income is. However, if you are an active participant in your company's retirement plan and your MAGI exceeds $79,000 if you're single, $126,000 if married, your ability to deduct your 2025 traditional IRA contribution begins to phase out. If you are not an active participant, but your spouse is, your ability to deduct phases out when MAGI reaches $236,000. So some powerful strategies for you. Do not become part of the procrastination nation. Get that IRA in. Get that Roth done. And then we're going to also talk next about some strange things with 401ks after divorce. But first, we got Guy. Go ahead, Guy.
Good morning. How are you, Josh? I've been listening to your show for a lot of years, and I love it like everyone else.
Thank you.
My question, Josh,
tell everybody
is,
you know.
62.
Give us a 5-star review.
Absolutely. Yep. I'm turning 62. I've had my own business for 37 years, and along with an employer plan for health insurance. And this kind of relates to the person that called earlier and to myself. I want to retire, and obviously if I'm going to retire and close the company, I'm not going to sell the company, I won't be able to maintain health insurance through my employer plan. Apparently, the only options around now are to go on those state-specific Affordable Care Act, Obamacare Act, where you can no longer call and buy robust insurance at any price directly from United Healthcare or Blue Cross or any of these other health insurance companies. A, is that correct? And B, is there anything else that you could advise if I wanted to retire and not stay on my employer plan?
Okay, we just heard from Rick, who's a client of mine, that we are getting more and more requests, by the way, for pre-Medicare medical insurance funding. Obama, some people are using cooperatives like MediShare or the Christian Health Exchange networks. So a lot of people are no longer selling private health insurance because of Obamacare, but we have been hearing that there are more competing options. So you could do COBRA for a certain amount of months. You could look at doing one of these medical sharing programs. You could look at going on the exchanges. And there is another healthcare company that is going to be trying to compete with Obamacare soon. I think this is a problem. I call on President Trump to allow people to buy health insurance across state lines and untether health insurance from an employer. So that way, you want to go in a pool, you can. We've been hearing about this for years, and nothing on both sides of the aisle has been done. So I'm calling on President Trump to do something about this. But we can certainly help you. There are options. Just call us, and we could figure out what's the best
Josh,
way.
I have a robust plan, meaning I don't want to mention a number, but I pay, between $30,000 and $40,000 for my family for a good plan, because it's not something I want to cheap out on. And everything else that I've looked into, whether via state or via local, or no one offers a good plan that could even remotely match the quality of an employer plan.
But sometimes what we do is we do a private. So like the other thing you could do is keep your company open, run very lean, semi-retire, but keep your company open for like, how old are you?
62.
So from 62 to 65, and you could do Cobra probably as well. So what you do is Cobra's mostly like 18 months. So 18 months before you turn 65, you go on Cobra, you shut down your company. Before that period, from now to 18 months prior, you just keep your company open, but you run lean. You transition your employees out. You get a sale. Are you looking to sell your company or what? Or you could sell your company and make a precondition of the sale. You stay on the insurance of the new purchaser. A lot of things we can help you with.
But if I close my company, the Cobra will not be valid, correct?
I think you get it for 18 months, though, right?
Even if there's no company that's open to pay
I'm not an expert in Cobra, but I think you get it for 18 months. But let's give us a call. We'll get our health experts in contact. There's about 3 or 4 guys I'm thinking of. And we'll work with them to build a plan for you. Can you sell your company to somebody who has insurance?
No, I can't. I looked into all that. So
that's another thing. I just talked to somebody this week who's helping companies 1 to 15, and it's free to talk to them. 1 to 15 million EBITDA, sell, and they're getting sales that people didn't think they could sell their company, and they sell it for something. So you never know.
Okay, yeah, it's a crazy thing. You can buy anything you want in this great country, but you can't buy health insurance direct.
Yeah, it is a big problem. No,
a huge problem. Pre-retirement, robust health insurance, because the one thing you don't want to gamble on after working for 40 hard years is your health.
Yeah, you might as well work for three years, and but we'll look into some of those options. I mean, you sound like me. I don't mind going cheap. I don't go cheap on health insurance, so I have that same philosophy too, because stuff could happen. And we could certainly work with you to get a plan together. So give us a call. We just had our brain trust. We've all brain trust on the show. If your company closes and terminates its group plan, you generally do not get Cobra. If the plan dies, Cobra dies. So if you're in New York State, they have something called New York Mini Cobra. And then there's the healthcare marketplace. Have you looked and filed on healthcare exchanges for like the platinum or the higher end? See what they give?
He's gone.
They're not. So anyway, well, give us a call, 888-988-JOSH. And that's part of our 6 game-changing playbook. So, folks, this was a great show. We did a lot of what we do with the legendary retirement game plan. So, Jalinski Advisory Group, we're all about all heart and no regrets. Playing the game with heart and planning in such a way that you lessen your regret. Meaning, the guy who called earlier said, I got all this money and I want to retire. Like, what are you waiting for? You know what? I've gone to too many a funeral where somebody says to me, Josh, thank you for helping me to retire, but I wish
sit tight.
I could have retired a year or 2 early. What do? You get an income plan. Number 1, you get an investment management plan. Number 2, you get a healthcare plan. Number 3, 4, you get a legacy plan. 5, you get a housing wealth plan. And 6, you get a robust tax plan that includes Roth strategies, all the 6 things. If you're listening and you want to know more about what we can do for you, call us, 888-988-JOSH, 888-988-JOSH. We'd love to give you a copy of my best-selling book, When You Schedule and Keep Your No Obligation Review. 888-988-JOSH, 888-988-JOSH.
The preceding program was sponsored by the Jalinski Advisory Group. Any awards, rankings, or recognition by unaffiliated third parties or publications, including five-star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jalinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at jalinski.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jalinski and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Investment advisory services